You're listening to the Functional Medicine Business Podcast featuring Dr. Deb, one of the most creative functional medicine business practitioners in her industry. She shares the wisdom and knowledge that she has gained over 25 years of functional medicine. A pioneer in functional medicine, scheduling, leadership, and practice management. Dr. Deb has a wealth of knowledge and is eager to share to help functional medicine become more productive and for the practitioners and patients to live better lives. Our podcast shares the good and the bad of our industry because Dr. Deb knows the pain you live every day building a functional medicine practice. With practical tools on how to manage money, taxes, and patient care, she will discuss it all with you.
Welcome back to FMBI Podcast. I'm your host, Dr. Deb, and today I want to talk to you about deciding on your pricing. You know, a lot of businesses set their pricing without a lot of thought into it. And I think this is really a big mistake, and it's causing them to leave money on the table from the beginning. Now, the good news is that it does take some time to get your pricing strategy right. But I think once you do that, it can be a powerful growth lever. If you optimize your pricing strategy so that more people are paying a higher amount, you'll end up with significantly more revenue in your business with less people. Now that sounds obvious, right? If you charge more, you're working less, and your business effort is better. It's what we all call high ticket in the healthcare world or in the coaching world. That's a no-brainer, right? But you want to decide, are you going to be a high ticket? Are you going to be a medium ticket or a low ticket? Now, it doesn't have to be a package. It could just be even with how you're seeing your clients. But it's important for you to identify what bucket you're going to be in, because this is how you attract your ideal client. If you choose to only be in that high ticket area, there's only going to be certain people you want to talk to in your marketing, but those are going to be the certain people that you are going to see as well. So if, say for instance, you decide that you're going to charge $1,000 an hour, or you're going to do a 6-month coaching program for $15,000, there is a distinct population of people that can afford those services. And with that population of people and that price range comes a very distinct expectation on your client's side of what you're going to do. Now, if you decide to be on the low end, that value is also different. How you talk to that ideal client in that low value category is different as well. But you're also going to need to see more people in that low value structure in order to make the profit that you want compared to a high ticket area. So it's really important to understand that when you're thinking about that, your price range not only determines the type of clientele that you see, how many clients you have to see, and your marketing strategy. And these strategies are really important. And product pricing strategy really determines many different things. So here are some pricing strategies that you can think of. There's something called value-based pricing, competitive pricing, cost plus pricing, economy pricing, and dynamic pricing are just a few of the terms that people use when they're talking about a pricing strategy. Now, if companies are focusing on acquisition to grow their business, studies have shown that small variations in pricing can raise or lower revenue by 20 to 50%. So that is significant. And there can be some missed opportunities in the business world to see immediate growth with a price increase. Now, because most businesses spend less than 10 hours per year thinking about pricing, there's a lot of untapped growth potential in optimizing what you charge. Actually, choosing the best pricing method is more powerful growth lever than customer acquisition. And in some cases, it can be up to 7.5 times more powerful than acquiring a new client. So really nailing your pricing strategy is important. And you want to make sure when you're looking at an effective pricing strategy, it portrays value. It convinces your client to purchase the service or that they need the service, and it gives your clients confidence in what you're delivering. So in some of our practices, we supply supplements or we sell supplements in our offices. Many of those dollar figures or those prices are fixed by the manufacturer. They will tell us what the recommended retail price is. Now, can you run a sale on those things? Absolutely, you can. But you're limited to market that sale, and you want to make sure if you're doing that, you're still making an appropriate margin so that you're not completely taking no profit off of that supplement. Now, the next thing that in our practices we're charging for, right, is our time. We're a service-based product, so we're charging for time. Now, you can do that in a one-on-one time basis. You could do that in a group where it's you with many people, and you can also do that in a package. I really think it's important to have a variety of these type of things. So you have a one-on-one price, and these are for your clients that you see on a one-to-one basis, whether you're paying cash for that service or whether they're paying insurance for that service. You have to set your model and your price per hour. Many people will set this based on their expertise and the complexity of the clients that they see. So when you're determining price, whether you're a cash practice or an insurance-based practice, you want to look at how complicated are your patients. Now, if you're in an insurance model still, you know that your fees are capped at a certain level. But like most specialists, they charge more than what the insurance price is capped at, which means the difference of what the insurance is going to pay goes to your client, and your client has to pay that difference above and beyond what it is if you're not in network. If you're in network, you're going to take a loss. So it may not be beneficial for you to look at that and overly charge for an insurance model. In a cash model, that's very different. Now, you also want to look at package prices. We do a lot of package prices in our office for our ancillary services. We have a single price. You want to get an IV, it's a single price. If you want to do a package of IVs, we're going to give you a discount on that. You're going to buy 5, 6, 8, 10, whatever it is, and we're going to give you a discount because you're paying for that up front and you're buying a package of them. But we also remind the clients that if you buy a package, that's the package. Like, we're not going to refund you the difference if you decide you only want to do 3 or 4 and you purchase 6 or 8. We are not going to refund you the difference. You got the discount as the package. Now, in a rare occasion, if somebody's having a real complication with something or they have a reaction to something, we will swap things out for them because we want our patients to be really happy with the services. But for the most part, when they buy a package, the package is what they've purchased. Now, you can also do different things. You can provide high ticket items, or you could do a bronze, gold, and a platinum package. Here are the 3 different packages that we have. If your providers decide that this is what the treatment plan should look like for that person, but maybe they can't afford all of it at one time, you can tier your packages so that you have a lower ticket, a medium ticket, and a high ticket. And the high ticket is the ideal thing. This is what's going to make them feel the best, the quickest. The middle of the road one is going to still get them there. It might just take a little longer. And the lowest aspect is, yes, we can still get you there, but again, it's going to take even longer. And that way you can let that client decide what's in their best interest. Now, I have always been old school in the business world in believing that practitioners should not talk money with patients. Now, some of you, you're a solo practice. It's just you. You don't really have a team. So you're going to have to do this. But if you have a team, especially when you start doing higher ticket items, I really think it's in the best interest for you to have somebody else that can talk money with the patient. That means you're only directing what's in the best interest of the patient and their care, but you're also not making a decision as to whether or not you think that client can afford that service or not. Many times it's our own hang up with money that prevents us from offering the best services for the clients because we assume they can't or won't pay for a particular service. And that couldn't be furthest from the truth in many cases. We don't know the value that a client puts on a service or their health in many aspects. And they may have an opportunity to do something that we don't even think of. But because they tell us their story and they're not feeling well, we resonate with the fact that maybe they can't or maybe they won't do that. And it's the worst thing that could happen for your practice if you're feeling that way. So I think it's really important to, in your team, when you're at that place, to build in what we call a closer, right? Somebody who can talk to the patient about money, can explain the differences of the programs that you're doing, can tell them this is what we're going to do, this is how things are going to work, this is how it's going to happen, and build in a little of something. You know, if you're offering a service, but it's say maybe a $3,000 or a $5,000 service and the client's worried that it may not work and they're putting down a lot of money, you want to have an alternative option for them should it not work. So say they pay you $3,000 for this program for 6 treatments and it doesn't work. Okay, then you can say, okay, if it doesn't work in this amount of time, which we know it should, then we'll do X for you. You know, maybe we'll throw in a couple of more procedures, or we'll do this or that. But you want to give them something that makes them understand that should it not work, there's a recourse for you. You're not going to refund all of their money. This is science. It's not perfection, right? We don't know that everything we do is going to work for somebody, and we don't have control that the patient is going to do everything that we want them to do. So that can affect their outcome. So you have to be cautious with that. But as providers, we want to see people get better. So it's easy for us to give discounts or give away the farm. And in a practice, especially when you have multiple team members that you have to pay for, you can't afford to do that. You need to be strict with the dollars, and you need to be able to talk money with your team, and your team needs to be able to talk money with your patients, and your patients need to understand that this is the process, this is how it goes, and this is what we want you to do. So I really like this model. I think it works really great. I would encourage all of you, if you have been one of those businesses who rarely thinks about pricing, to start thinking about pricing. You need to make sure that you're looking at your pricing structure of what you're selling, because right now with inflation, things are going up relatively quickly. In the past, where businesses would raise their rates maybe once a year, our vendors are raising their rates quarterly, or some of them even monthly, because their raw materials are costing them so much. So we are having our team look at our raw costs every single time we purchase something to make sure that those prices are not going up outside of the range that makes sense for us to make a profit. Because if it is, then we have to adjust for that. We have to maybe increase our prices at a different time schedule of the year than we were before, based on what our costs are. And I suspect this is going to continue to go on for a while. So it's a really great practice to get your team into. If you haven't raised prices in a very long time, now more than ever, you need to think about doing that with inflation, because what somebody is paying you for today is different than what they were paying you for tomorrow or yesterday, even though the dollar amount is exactly the same. You want to make sure that you're making that profit and you're covering your expenses. Your expenses have gone up, just like everyone else's household expenses have gone up, and you need to be able to cover those costs. If you don't transition and trend with that, instead of profiting this year, you may be ending up having a loss this year. And that's a really difficult place to be in. In the 2008 down cycle, our practice actually grew 45% during that time frame. And I'm looking at my practice right now with another inflationary time, and we're looking at another decline coming up here. And this year alone, my practice has grown 64%. So just because there's hard times doesn't mean that your practice still can't grow. Both of these times that I had growth, it had nothing to do with raising our prices. It was a part of acquisition. But in part of acquisition, you also have to look at price strategy and how you're acquiring those people and why you're acquiring those people and how you're going to continue to provide care to them while growing your business as well. So pricing is so important. It takes a good amount of time to look at and strategize and figure out what's going to work for you, because the last thing that you want to do is stay stagnant in your price structure because you're afraid people won't pay it. If you do smaller incremental raises in your pricing structure, people will do that. They can afford that. It's not that big of a deal for them. But if you haven't raised prices in 5 or 10 years and all of a sudden you decide to raise your prices $200 in one full swoop, that's going to send red flags to your clients. That's going to create problems for you. Or if all of a sudden you're at that moderate level and you decide everyone's going into a high ticket concierge service, you're going to lose out on a lot of clients with that kind of structure. You want to gradually ease into that kind of structure, attract that concierge type of clients, and then you can slowly wean off your clients that don't fit the model that you want at this point, or you bring in someone else into your practice to do that model of clients that you no longer want to do, and you do the high ticket, and that way you don't lose your clients at all and you don't lose your revenue. Oftentimes we think, I want to transition to this, so I can't do that. Well, maybe not for you personally, but that doesn't mean that you can't bring somebody on to do that part of the business that you no longer want to do. And I think it's really important to think about that. That's how your practice grows. That's how your business grows. But again, it has to fit with your model for your business. And if your model is not to build a team, then that may not work. But then maybe what you do is you take that model of business that you don't want anymore and you sell that part of the business to somebody else instead of just letting those clients walk away. You really have to be strategic in your thought process when you're looking at setting a pricing structure. So I hope this was helpful to you guys. Leave us some comments in the chat if you'd like. Share your comments on Facebook in the Functional MBI Facebook group, and we're happy to have some conversations there.
Thanks for listening. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To catch all the latest from me, you can follow me on Facebook at FMBI. Join our free group where we support one another and share our struggles. Thanks again, and I'll see you next time.